Okay, it's time for the Personal Finance Corner. As always, we've got Faye Indurain joining us live on the show. Faye, what are we discussing today?
We're going to review a quick tax saver fund, Sandeep, and we'll find out that since we're getting closer and closer to our tax quarter, we should start making those investments now. Let's bring in Dhirendra Kumar, the CEO of Value Research. Dhirendra, thank you for joining us. I want to particularly review the Religare Invesco tax plan. Now, it's always been part of the top 2 quartile funds. It's the top performing fund in its category. Now, does this performance qualify it to be added to our portfolios for this year? Can we rely on this fund for our tax saving?
Yes, Religare Invesco Tax Planning Fund has been an impressive fund. It has been an above average fund for a while now. This fund follows, has carried a very diverse portfolio, changes track and follows a bottom-up strategy. Generally invested in about 20-30 stocks. Fairly manageable and an impressive performance based on this the size and the scale. So I would say this fund has shaped up very nicely, and it is a fund worth considering.
Dhirendra, for those who've invested in this fund already, who have now finished our lock-in of 3 years, would you recommend that we stay invested and we continue to rely on this fund?
Yes, if there's a fund which is worth investing now, and if you are already invested, then it is worth remaining invested. But for investors who are who lack the scale and they have a liquidity issue, they might consider moving that money out and investing in the tax savings even, because if you don't have enough savings to put your money to make your tax saving investment, and if this is an investment which is out of its lock-in period, it is better to recycle it and take that advantage. Tax save is money earned.
In fact, we have a question from one of our viewers. BP Singh has written in. He tells us he invested 30,000 rupees in the HDFC tax saver, 10,000 in the L&T tax advantage, and 20,000 in the Birla Sun Life tax relief fund back in 2010, which means that he's nearly out of his lock-in right now. Now, he tells us the value of the HDFC tax saver has slipped considerably. He wants to know if he should switch to another tax saving fund at this point. What would you suggest he does?
I would say that yes, HDFC tax saver has been very disappointing, and not only HDFC tax saver, in fact all the equity funds, all the mainstream equity fund or the prominent equity fund of HDFC fund family has been a disappointment. But I would say the disappointment is understandable. You know, the fund manager has taken a bet which has not worked relative to other funds in recent times, and I don't think this is the best time to actually exit the fund, because let it play out. Good that you have diversified. Look at the reason why you diversify, and you did spread your investment over 3 funds, and 2 of them are little better off. But I would say that the difference in return of HDFC tax saver or L&T or the Birla Sun Life tax saving fund, it's not hugely different, because yes, you have a marginal negative return and there you have a marginal positive return, but most investors in equity over the last 3 years, I don't think they have much to cheer about. So this may not be the finest this may not be the best time to exit the fund. Wait for some more time, even though it is proving to be very disappointing.